Another day, another headline in crypto and finance. This time, it's the SEC suing Binance. Investors are fleeing Bitcoin to the tune of a huge 4.9%. Is this the end of crypto? Is this what we've been waiting for? Or is it a beautiful opportunity for those that have their plan set up, for those that have a vision of the macro understanding of the cycle? What is it going to be? Is this the bear's turn to finally break the market down? Or is this the bull's opportunity to buy the F and dip, sit back and relax and wait for the cycle to play out? I think you know what my answer is on this. However, let's discuss both sides of the equation. But first up, hit that like and subscribe. You know the deal when it comes to YouTube and the algorithm. All right, guys, let's dive into the headlines here. SEC claims Solana, Polygon, Cardano, securities, and Binance lawsuit. Basically, the headlines, the reason for this particular dump is that the SEC is now suing Binance. They want Binance out of the US. They want to come and destroy crypto in the US. They want it gone. The narrative around the Operation Choke Point. Now, there's always some sort of major headline or narrative, right? So I think for the unsuspecting retail investor, what the SEC is trying to do is pin Binance to be the same as FTX. Get your money out. The thing is going to collapse. Stop trading crypto. It's a scam. It's going to ruin your life. Most of that's probably true. Most of it is a scam. 20,000 coins. Most of them are going to go to zero. This has happened so many times in the past. Yes, they'll go to zero. However, what the SEC hasn't talked about in their lawsuit is Bitcoin and Ethereum. So what they've questioned is Binance's use or selling on the exchange of stablecoins like BUSD, 10 other tokens like Solana, Cardano, Matic, Filecoin, Atom, Sand, Mana, Algo, Axie, and Coti. Maybe there's going to be some more in the future. Maybe some of these are going to come off the list, but this is what they have come after so far, because they're saying that these are not supposed to be traded on their securities, or they're treating them as such, and that Binance is mishandling user funds. So all allegations at this point, and of course this is scaring the market to the tune of a huge 4.9% at the time of this recording. So next thing we're going to look at is, what do we do in these situations? So I've got a post here on Twitter. Go and follow me on Twitter if you haven't already. Links are in the top of the video description, along with our free crypto and economic report that is coming out now in approximately 36 hours. Link is in the top of the video description. There's jam-packed full of Bitcoin, crypto, real estate cycle, stock market stuff that you need to know about, as I would say. So the tweet here, we're looking at what we've seen in the past, what we've just seen over the last 4 or so months. US banking crisis, that was the March low. So let's have a look at this on a more macro time frame here, right here at the bottom here, $19,500. We've also had the regional banking crisis. That was also a nothing burger. That happened throughout April and also in May. We had the other banks that were collapsing during the banking crisis here. We had the SVBs, we had the Credit Suisse, we had the Deutsche Banks. That was all through these moves to the downside for Bitcoin throughout March. And of course, the market has moved away from that point. And more importantly, it's moved away from that point on the S&P 500. This is the biggest one. This is what's most important. So nothing burger there, nothing burger there. US debt ceiling crisis, nothing burger there. We're at 3. Interest rate hikes, nothing burger there. I know there is going to be plenty of people saying that is incorrect. We're seeing a lot of bad stuff go on in the economy. Remember what we do here. We trade the markets, we trade the charts, we trade the facts that are going on with the data coming out in the charts. We are not trading the economy. We're not trading how bad some groups of people may have it in life. We're not trading how some people may not be able to afford fuel, some foods, energy, housing, real estate. That's not what we're trading. We are trading what the markets are giving us. We are trading what is in these charts themselves. So we have to always remove those emotions and the fears of the economy and just trade what the market's giving us. And that's why I've got here a nothing burger. Recession fears, same thing. Nothing burger. Even if there is a call of recession, even if it is announced, the charts are telling us a different story. And we're here to make money from the charts. If they're going up and you're a buy only, a long only, then You've got to be buying low and selling high, not waiting for some sort of economic data to come out. Trade what is in the charts. So if this is a nothing burger, this is a nothing burger. US debt ceiling crisis, nothing burger. Interest rate hike, nothing burger. A recession fears, a nothing burger. And I'm saying they're a nothing burger because they've happened all throughout this period here, and these periods, and these periods, and these periods for the market going down. And the market is now above all of those prices. That's why they are, in fact, a nothing burger. Then what if SEC suing Binance is also a nothing burger for Bitcoin, for cryptos? What if it's a nothing burger? What should you do next? Some of you guys have got some comments here. Good point. What should we do here? Stack sats. They are also some good answers as well. So let's have a look at that on the chart itself. Daily, weekly, and monthly. We have different time frames. We have different views of the market. As I record this, we are at 30 minutes to go. So this will be closed by the time I'm able to post this. But what's happening right now is the market is climbing ever so slowly, but it's getting back above 25,800. I'm not saying that this is where it's going to be at the end of the close. If it closes under these levels, that's a little weaker, and then we're probably going to see at least another test of the current low, which is at 25,391. So basically 25,400. So if we get a close underneath these levels, they are the base, then probably the market will try and test those lows again. And I'll show you what or how that looked in the past as well. Now, if we get a close above these levels, then that's a little stronger. Maybe we still try and test them, but it's going to be a weaker test to the downside. If for some reason in the next half an hour we get a nice strong push up and we start to close above 26,000, and more importantly, probably above these levels here. This is where that previous low came in at 26,300. Basically, you got the close, another close, and then the push away. That's going to be an even stronger level. And then the yellow line here. So that's where this swing low came in. It's where the market started to close above. That's where the market was consolidating above. That is going to say that this was a nothing burger in the quickest fashion possible. Now, of course, not much time to go, so I don't think these options are likely, but never fear. We've talked about this 7 days ago in this video here. What's next for Bitcoin in June? Looking at the macro, looking at the micro as well, and then giving us an idea of support and resistance zones for this particular area of the market for the buy the dip opportunity, which again, we looked specifically at in this video. What if we see a test to the downside? As you can see here, this was the May bar. We haven't even entered June when this video was uploaded. So just looking at what could happen and how we should act if certain things happen in the market, your pivot points, those sort of things. So this box has been an area that we've been looking at for a pretty long period of time. This is 27,000 to the upside, 24,000 to the downside. So we've dropped back into this box. We're underneath these levels. If you want to play it a little more risky, you're going to be buying up the dips to the downside. But if you cannot handle the heat in the kitchen, have stops in play. Have your stops at key turning points on a macro chart. That is what I'm looking at to the downside here. If you want to play it less risky, then you wait for those levels that I just talked about. You want to see those closes get as high as possible, but if you don't want to wait until the market breaks $28,500, then just keep your stops at slightly lower points as well, if the market, of course, comes back and climbs above these levels. So that's what we have so far. That's what is happening right now. How do we get to this point on the daily? Where we're looking at the 50% rejection here on May 29th, so a little weaker there. And then yesterday, the weekly chart did not close above our 50% level. So that's these two rejection points. 50% rejection on the downtrend, and then a weekly close below 50%. And that 50% comes from the low to the high. And you can see how it just missed the 50%. It closed at 27,122. The 50% was 27,169. So short by about $50. And then we get that quick flush to the downside. So the trend was down. And when the trend is down, all it needs is a little nudge from some sort of bearish narrative. We've got the bearish narrative, SEC going after Binance, and that allows the market to continue in the direction of the trend. So what you would be waiting for, what we're waiting for, is a consolidation or some sort of stopping volume, some stopping area in terms of price to get us back above those levels. The other thing we looked at in this particular chart moves on to the weekly chart. So looking at something a little more macro, and we started to look at weekly time counts to the downside. At the time, we were at this week here. So we'd seen 4 weeks to the downside on the swing, and we were sitting at around the 6th to 7th week itself of the market not getting back above the top. We finally have a lower low than the 4th week, so that puts us out at 8 weeks down. And we're coming into some news next week for the US with the CPI data and the interest rates. And so this is coming out in really good timing on the weekly chart. So what we saw from the downside, just as a quick recap, 11 weeks from the top to the bottom before we had a pretty significant correction. This is the bear market. This is the transition period, however long it takes. We've talked about timeframes. So these areas are going to fail, but you can get a count of how long these moves take to the downside to give you an idea of how long these moves might take. So we had 11 weeks to the downside. We had 11 weeks to the downside. We had 12 weeks to the downside, plus 2 minor weeks that only just touched it by a few dollars to the downside. So 12 to 14 weeks. And that is that little move that I talked about earlier where the market closed down, had a very low close, tested again, broke it by a couple of dollars. So 15,632, 15,479, barely worthwhile in a percent, only 1% to the downside. And then of course we moved away from that point. So we've had 11 weeks, 12 weeks, you can count it as 14 if you wish. And now we see ourselves at 8 weeks. So we're coming towards the end of this move. Do we finish up here? Do we finish up in the next 1 or 2 weeks, bringing us out to about that 10 or 11 week point? We'll let the market tell that story. But at the end of the day, even in a bear market, that was basically the extreme of the downside move. It could only do 11 weeks before a correction came. So 11 weeks to the downside. So pay particular attention if you're looking to get into shorts or anything like that, or expecting this move to take out the low, to take out the next low. You're running against time right now, because in the bear market, at the worst possible times, these moves to the downside, we have to, at least the bears and the bulls can agree, these moves to the downside are far, far, far more severe than what we're seeing right now. And if that's the case, you need something as severe as what happened here. You had Lunar UST collapse, basically billions of dollars wiped out of the market, more billions of dollars here with user funds in CFI, that was the June dump. You have to have something far, far, far more severe than that to tank us back to those lower prices. That's just what needs to happen in the market to get it to that point. And you're running out of time for a major narrative like that. They're trying to do it with the Binance narrative at the moment and trying to position Binance the same as FTX. Of course, those of us who have been around a long time can see the difference between them. Nothing is guaranteed in this market, but you have to expect and understand that there is a difference between Binance and FTX, the way they're being run. Okay, so we've gone through all of that. We've also got this video here. This was 7 days ago. Another piece of the puzzle, the MVRV score. This is not dropping back into the green zone yet. Maybe you'll get that opportunity, but at the moment, even with this current move to the downside of 4.95%, it's still unable to get back into that green zone. However, as a buy the dip opportunity, the price is not that far different to where the market reached the peak of the green zone. So you look at the peak here at the green zone, which was this bar here, the top to where we currently are at the closing price is about 4.6%. So this is just to adjust your risk if you're looking to get into the market. What is the market going to do next? Who knows? What we are trying to understand is how much are we leaving on the table if we are waiting for further downside before we get into the market. Okay, so for the daily, obviously the swings are down. For the weekly, the swings are down. We're running out of time for any sort of major move to the downside. What's the monthly doing? Well, the monthly is also running out of time. We can see we had 1 month to the downside, 2 months to the downside, and in this case, 1, 2, 3 months to the downside, 2 months to the downside. This is an up bar, even though it is red. We've got 2.5 months to the downside. So far, we're at 2 months to the downside. So we may get a change in trend in June. We might see this low come out mid to late June, wherever it may be. And at that point, I think the time is going to be up, meaning the time to this downside move in the shorter term cycle, the weekly cycle here, and potentially even in the monthly, because we're looking at this 3 months here, 2 to 3 months here. 1 month here, another 1 month here, that could be the end of the move and we start to get another churn back to the upside, which is what we looked at in yesterday's video as we covered the S&P, the NASDAQ, Dow Jones, the Russell 2000, as we look at these particular markets potentially coming out to a topping point, which may also turn the market as well. So in terms of the S&P, just a quick look at the traditionals, you can see we're coming up to a technical area of 4,300 points. Just overnight, it hit 4299.28, but on the futures market here, it did hit 4305. So we're getting close to that top of the August level there. Expect some sort of short term, maybe a bit longer term of a correction, maybe a grind sideways. We'll continue to cover that. But the main thing I wanted to look at today was Bitcoin and cryptocurrencies as they continue to bleed out. So if they're bleeding out, what else can we look at? What else can we do here? What are we going to do with our money? Before I have a look at that, you know what I need from you? Hit that like and subscribe. Let me know where you're sharing the content with. Is this across Discord, WhatsApp, Twitter? Where are you sharing the content and how are people responding to it? Our newsletter also goes out in the next 36 hours. Link is in the top of the video description for that. Back to the cryptos and what we can see from the total cryptocurrency market caps. Over here on the right-hand side, you can see the drops in price of the total market caps. This is total. This includes Bitcoin and ETH. Total 2 excludes Bitcoin. Total 3 excludes Bitcoin and ETH. And if you look at the percentages, it's only minor, but of course these are the total market caps themselves, including everything except the 1 or 2 exclusions. You can see that the total 2 has dropped the least, which means ETH is holding up the best when you look at the total cryptocurrency market caps, because the top one has Bitcoin and ETH. And we know Bitcoin has dropped. Of course, ETH has dropped in USD value, but it has actually gone up or is holding relatively stable against its BTC value. So ETH BTC is holding up by 0.8%, still at above 7% overall of Bitcoin's value, still holding the $1,800 level, even though it's dropped 4%. Bitcoin has actually dropped 4.8%. So it's holding up against its BTC value, whereas you can see everything else is having a very, very hard time holding up against BTC. Filecoin, 5%, FTM, 6%. Anything against its BTC value is basically dropping. LTC, you've got their LTC, you've got Link, you've got everything is in the red. We don't need to go through these over and over again, but you had the odd 1 or 2 that's 1% up, and in this case, Quant also 5%. What I'm saying here is look for some of these cryptos that have a stronger ground against Bitcoin during these times when Bitcoin is going down, and that might help you find the stronger cryptocurrencies. When the market is dropping, Bitcoin of course, and your altcoins are holding up against their BTC value, that could be a sign that it's going to be a stronger cryptocurrency leading into the next bull market. But of course, you need to compare many other factors like where are those lows? Where are those lows coming in? Are you seeing the coin go down, 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 and then finally get a quick little bounce? Or something like ETH, where the low against Bitcoin was in June, another low happened in March, and you've also got a higher low here in May, and it's still finding strength against Bitcoin while Bitcoin is going down. Doesn't mean that these are going to hold over the next several months, but you've got a much better sign of strength here with the lows holding on a more macro scale than something like, let's pick Doge, which in fact is very, very weak. You can see all the lows continue to get taken out. I literally just clicked on one of these just to find out what's going on. And DOT, look at that, it's up positive against BTC, but it's down overall. Massive, massive downtrend. That is not what you want to see in a cryptocurrency that is going to be strong in the next cycle. We've covered a ton of ground here with the Bitcoin crash. Keep an eye on this low. Where is this market going to close today and over the next few days? The key level we want to see initially is $26,600. Some nice closes above there. If you're feeling risque, then maybe there's some good buying opportunities here. But of course, if you can't handle the heat in the kitchen, definitely keep some stops in play in case the market continues to fall and you're a little scared of holding the BTC. Overall, the macro trend, the monthly, is still up. I'm still very bullish on the macro trend. Short-term trends are very, very different. They move in different cycles, but overall, the monthly is still in a nice solid position. What's also in a nice solid position is your support with the channel. Hit that like and subscribe. Links in the top of the video description, of course. Next 36 hours for your free crypto and economic report coming out. Otherwise, I'll see you back here in the next video. Until then, take care and peace out.